Oh boy, 15 trading days into the year, and we are already down 8% for S&P 500. Well, that's not the year we were hoping for, right? But of course, in any market downturns, there are hidden opportunities. And the last thing we want to do is to make any irrational decisions, panic. It's always great to have a strategy, right? Whatever is happening, it always needs to, kind of come from the frontal part of your brain. You cannot really let emotions dictate, which of course it can be gut wrenching seeing your portfolio, down maybe 10, maybe 20, maybe you're in some higher risk companies, maybe you're down 30%, right? But as long as you have a strategy and vision, 3, 5 years out, you're going to do fine, but you cannot make any mistakes. And it's twice as hard in conditions like this when there's a lot of uncertainty, lots of fear in the market, and there might be more pain to come, but you have to know what you are going to do in different scenarios, right? So let's take a look what can happen and how you can prepare so the decision you are making is according to your own standards and not basically, just reacting to whatever happens. Let's get into it. Hello, guys. Hope you're doing great. Hope you're kind of prepared mentally, right? Because investing, it's always a tough ride. It can go up, it can go down. Usually, going up is a little slower, takes some time. Down can be pretty fast and vicious, as we've seen during the last 15 trading days. And I always want you to have a cool mindset about all of this, right? Because there never comes good decisions from emotions in the market. And whenever you're doing any kind of analysis, right? In all of this, it's always better to act based on kind of your strategy and data points that are available. Never let the emotions to dictate your moves in the market, right? So I would like to basically tell you three main points that are important for myself whenever there is kind of a tougher time in the market, right? Because that's when you basically need to, in a sense, calm yourself a little bit, or a little bit revisit your bullish thesis, revisit kind of some of the core principles of the stock market, right? So for number one, I would like you to kind of revisit your own personal balance sheet, right? Because in the same way as a company, you as an individual or a household are having basically your own domestic economy, right? And as a general rule, right, you should only invest the money you can afford to lose. So unless you are a really experienced investor and with maybe 5, 7, 10 years in the market, definitely don't play with the margin, right? You know, I have always some money on the sidelines, a little bit of an emergency fund, right? Always have these like generic expenses under perfect control. uh, so whatever happens in the market, it doesn't affect you, right? And it's completely same with the company, right? If the company has no debt, they cannot really go under, right? So you kind of want to have that fortress balance sheet. So even if stock market kind of drops, let's say 30% tomorrow, you are not affected as a person, right? And then that's really the kind of the core idea, right? That you as an individual are in a secure position, and investing is something that you are kind of building over time, right? You are allocating those resources and just letting it accumulate and see where it goes over the 3, 5, 7 years, right? Having this long-term mindset, because if you are having that mindset, you will be handsomely rewarded. But you need that patience and you need that consistency, right? So only invest what you can afford to lose and invest consistently over a long period of time. Simple as that. Secondly, you want to stick with your highest conviction stocks, right? The whole mindset about building your portfolio should lead you to a place where your portfolio consists of limited number of stocks that you understand very well, right? And you are comfortable in those positions regardless of any macroeconomic conditions, right? Because otherwise then you are in a more of a shorter term swing trading mindset. If you are having some companies that might be kind of fragile to certain environments, right? Let's say you are having companies, you are investing in companies burdened with higher levels of debt. That might get really tricky, right? If some, market downturn or God forbid, recession comes, and suddenly they, it kind of snowballs in the same way as a compound investing works, towards the upside, it can go towards the downside, right? If the company has a lot of debt, suddenly they are not able to get enough customers. Maybe they need to get more debt, but that debt gets more expensive to service it. So ideally, the companies in your portfolio are all in very healthy position, right? Because as a long-term investor, you're really only looking to make one thing right, and that's to buy a company for a fair price that will appreciate over time, right? So the only thing you are betting at is that vector, right? That improvement over time. So basically, if there is some very negative macroeconomic condition, let's say again, God forbid, recession, you want a company that is able to navigate through it successfully, right? Just maintain their customers. Maybe it's some needs-based business or business with a higher margin, right? Where if they need to maybe potentially lower price it, it's not going to hurt as much. um, so yeah, that's basically that, right? Your companies should be relatively robust or anti-fragile to negative economic conditions. And as long as that's kind of fulfilled, then you should sleep very well at night, right? Because okay, maybe the stock price drops, but as long as the underlying business is doing well, or at least well enough given the overall macroeconomic condition, then there is nothing to worry about. And thirdly, and most importantly, it's very important to have the right attitude about all of this, right? Because obviously it feels really, really bad to see your net worth plummeting, right? There is a kind of a belt effect in place, right? Obviously, when you are kind of seeing your portfolio, going up and up and up, you feel great, right? You feel wealthy, you feel like on top of the world. But it's the same on the other way around, right? If your portfolio suddenly plummets, it's painful. But you have to understand that that's where all the winners are made in a sense. Because first and foremost, it's important to stay invested in the market, right? Not get kind of a shaken out because you never know when the market starts roaring again. And secondly, it's also where potentially a lot of money can be made in all the economic downturns or crisis or anything, right? So, as long as there is this opportunity, then, just keep doing what you're doing, keep being consistent. And, potentially, if you kind of look at the, longer term chart, I mean, we had quite a big market crash relatively recently, right? In 2020, that was 30% from peak to the bottom. And of course that felt horrible, right? But if you just kept buying, and if you bought anything in this like range, in like in between to here, like basically any company you picked at that point appreciated very nicely until now. And you know this might as well happen again. You never know what happens. If we might get kind of a bigger correction, maybe up to 15%, 20%, up to market crash 30%. how long it might take. Is it going to be kind of a slow bleeding over the course of several months? Is it going to be like in 2020, kind of a quick V-shaped recovery? You can never really guess what how the stock market will turn out, right? Because there are just so many factors concerning the macroeconomic, individual companies, different sectors. It's basically too complex to model, right? You really want to do a bet that's basically in one direction in a sense, right? You really just want to bet on that long-term growth of the whole economy and on some of those great companies that will hopefully outperform, right? So in a sense, investing is relatively simple, but that doesn't mean it's easy. So, again, just continue your strategy. Whatever the market is kind of, throwing at you, just stay calm and have a clear plan, right? So, let's say as long as this video finishes, kind of sit down and have the discussion with yourself, right? Okay, this is my portfolio at the moment. This is where I see it in a couple of years. What am I going to do if the market drops another 10%? Do I have some cash on hand? Do I want to buy more? Do I want to wait? Uh, but think about it, you know, uh, rationally, right? Without any emotions. Make a clear plan. Don't just, suddenly buy or sell kind of on a whim. Um, Establish that clear strategy. And if you want to take investing on a higher level, then consider joining us in the Financial Fortress, right? Where we are having, many investors with multiple, even decades of experience, guys with multiple six or seven figures, and we are discussing market on a very high level, basically daily, so we can get the most out of it. So yeah, thanks for watching. Leave me a comment. What's kind of your strategy going towards the rest of the year, and take care for now.